Wow, what a move of BTC, and yet so predictable. Welcome breakers to this quick BTC review video. You want to know how this crazy BTC move was predictable? Well, let me show you first of all why it was predictable, secondly how you could have participated in this move, and thirdly what you must do now. Looking at the weekly time frame here, there were two simple reasons why this move really was predictable. First of all, let's look at our weekly levels as we always do, and we see that right on Monday at the start of the week we did sweep weekly liquidity. Secondly, if you also put on our weekly boxes, we see that we did enter a weekly fair value gap and basically reach the bottom of this fair value gap. Both reasons are big indications for a move to come, a reaction to happen, don't you think? With this in mind, let's move on to the daily time frame, and what do we see here? A bit clearer. First of all, the sweep of liquidity here right on Monday the 13th. Then if we put on our levels, secondly, we did enter our target box on the daily time frame. Where does this target box come from? You know the drill. Take your fib retracement from the bottom of your last leg up to the top, and there you go. You're right inside of your daily target box. Also keep in mind that we are looking at a bullish daily time frame and secondly a bullish weekly time frame. What does that mean for you? You want to look for long trades on the lower time frames. Which brings us straight to the second question of today's video, the execution. How could you have entered this trade? How could you have participated? For that, we simply move down to our primary execution entry time frame, the 4-hour time frame, and have a closer look at the price action inside of our target box, daily target box. Let's identify the last lower high and mark it out. Here we are. This is on the 4-hour time frame. We move further down, then we break this lower high, and what's the drill now? The drill is simple. Take your fibs, pull them up to the top, and then enter inside of your 4-hour target box on a limit order. Obviously, you want to keep in mind that the bottom of your target box hadn't been reached yet. Secondly, that you have weekly liquidity still resting underneath you. So you would have at least calculated with a potential sweep of the lows, and accordingly, you would have put your stop underneath this weekly liquidity box, underneath the weekly liquidity pool. Risk reward wise, your trade then would have looked something like that. A simple 1 to 5 risk reward trade at our hands. Or you could have told yourself, well, there's still weekly liquidity resting underneath us, so potentially this could be spiked, could be taken out this low, and then you enter once we reclaim. Had you waited for this low to be taken out and for the next market structure shift to occur on the 4-hour, you can see that potentially you then would have missed this move. On the 1-hour, however, you would have gotten the move again. Your last lower high broken here, then starting here, obviously you would again wait for a retrace, and it would come here February the 14th, 2 o'clock, 3 o'clock, right during New York time, New York session opening. You would have entered this trade for that move up. Finally, and as the third possibility of how to enter or how you could have entered this move, what about our already well-known cheat sheet? Let me show you our cheat sheet, and we see what While we are inside of our daily target box, we do have a squeeze deviation forming here. You want to drag the line over here. And yes, we do have the deviation reclaim back above right when the low was taken out. Look at the 2-hour time frame, same game, squeeze deviation, deviate below, back above, and of course on low momentum. Enough reasons, I guess, for all of us to have caught this trade. Zooming back out again to the daily time frame, getting rid of our cheat sheet, looking at our move. Obviously the question is, what should you do now? Well, if you are in the move, first of all, be happy. Secondly, think about taking some profit. Or secondly, if you're not in the move, you have to do two things. First of all, wait. I know this is not necessarily what you want to hear, but look at what we've just accomplished. We've had a 10% move up. You really want to enter after a 10% day. Secondly, you want to enter right into weekly resistance. Remember, this is our weekly target box, bearish target box. And what about shorting? Well, where is your indication for the short? The daily is bullish. Looking at the 4-hour, we're absolutely bullish. Looking at the 2-hour, we're totally bullish. There's really nothing for you to do than wait. If you want to consider a short back down, at least for a retracement, you need a market structure break first of all, at least on the lower time frames. Second action, if you have to wait, at the same time you can learn. Let me be honest, did I catch this move? No, I didn't. Why did I not catch this move? Well, I guess I didn't pay enough attention. Yes, I also was feeling under the weather. My little son was ill as well, but this shouldn't be an excuse. I just simply didn't put my alarms where I should have put them. I didn't pay enough attention. Am I annoyed because of that? Yes, I am. But does it really matter? No, in the long run, I think it doesn't really matter, as long as, first of all, we learn from our mistakes. Secondly, we grow as traders. And thirdly, we achieve our big aim, which is financial freedom in the long run. And this, after all, is what Market Structure Break is all about for me. And this is why I created this community with you guys. So let me know, do you like such review videos? Do you want me to produce more of them? And guys, don't forget to subscribe and support me and the channel. Looking forward to our next video. Until then, enjoy your profits or wait for the next chance to profit from the markets. Bye bye.